Hello, today is Friday the 28th of March. It is the second to last trading day of March. We've still got Monday to get through, but today is really for a lot of funds, it will be the last day of the month and the day they mark to market. And we could see some de-risking at the end of later today ahead of the tariff news and everything that's going to be happening next month. But what we've also got later today is a solar eclipse. It will be late evening in Europe and early Saturday morning in the United States. We've already had a really nasty earthquake, and this doesn't feel like a very normal day. Let's see how we go from here. If we take a look at where we are in Bitcoin, the most important thing that happened today, last Friday of every month, is a big options expiration in the spot market at Deribit. And at Deribit there was a record-breaking 21 billion, I think, 12.2 billion in Bitcoin options expiring today. The max pain point, and that's always a good thing to look at, the implied volatility is very low, but the max pain point was 85,000. That would be where most people lost money if Bitcoin expired there. And if we take a look at the hourly, remember these options expire at 8 a.m. UTC. We've got UTC on this chart, and at 8 a.m. UTC, it looks like they brought the market all the way down to this 85,000 max pain point. Does that mean that now that options expiration is out of the way, we're going to go higher from here? To be honest, since the options expiry, we've gone sideways, so we haven't seen a massive build in new positions. But yesterday we were looking for a breakout higher here, hopefully, from this what looked like a little bit of a bullish flag, and it didn't happen. But I think if we could come back here, we could actually say, well, let's look at it on a 4-hour. We are still sideways underneath these 4-hour moving averages, but we could argue that this, I'm going to connect this high and this high. We could argue that this potentially is still a little bit of a bullish flag or a declining channel like this. And if we bounce from the lows, the first place we need to get back above these 4-hour moving averages and the lows from Wednesday and Thursday. And if we can get back above Wednesday and Thursday lows and that moving averages, I think we go back to the top of the channel, and then we'll see again whether we can break out from here. I don't know if Bitcoin is going to be a safe haven. Kind of looks a really little bit dodgy at the moment, and we'll have to say, let's take my scribblings off here and talk about why this 87 sort of 600 level is really important. If we zoom out to the highs that we made in January on the inauguration day, I feel like this is our first swing lower, and here we're making an ABC correction. This was my measured move target here at 93,600. I think it was there or thereabouts. And this is the 61.8 level that we needed to get above if we're going to get there. And what happened of this week with the tariffs back on again and the auto tariffs, of course, is we saw some really nasty sell-offs in stock indexes, and Bitcoin's really correlated with the Nasdaq and unfortunately, got dragged down with it, and everything kind of in crypto with it. You know, whilst the sell-off wasn't dramatic and everything, as you know, month end isn't usually nastily bearish. Bitcoin lost 2.5% in the last 24 hours into this options expiration level. But, you know, some of the other altcoins like Doge lost 7% and ETH lost 5.5%. That's, you know, 6%, I think, in ETH. That's pretty painful. So, are we going to recover into month end, or are we going to see a really nasty shakeout? I would argue that we haven't really broken down from this rising channel that we're in yet. And when you're not sure, if I measure from this low to this high, I look at the 236 fib. If we get stuck and hold underneath that 236 fib, for me that kind of says, yeah, bigger correction underway. Now you can look underneath this level, so that again means that that's the level that we've got to recover if we are not going to keep going lower, and if we can't, then bigger correction underway. So I don't favour longs unless we get back above these moving averages, back above Wednesday and Thursday's lows, and back above 85,950. Otherwise, I'm afraid the path of least resistance is lower, and the next pullback levels that we could be looking at, which we could still bounce from, 84,176 and 82,749. When you see a pattern like this, once we kind of go below 50%, then we really have, I would say, broken down this channel, and we are on our way lower. So no breakout yesterday. Everything just got killed by what was going on in stock indexes. And yeah, let's see if we get that eclipse shakeout again. One chart that makes me not so bearish Bitcoin is Microstrategy. Quite often, Microstrategy has been a really good leading indicator. So one of the reasons that I like Microstrategy, let's take everything off here, is we had a pretty textbook double bottom down here in Microstrategy, and then we broke the highs of this double bottom, and certainly the closing highs. We were looking at above 305. So for me, I'm looking for this, and this daily moving averages, I'm looking for this to find support here if we're going to continue higher. And this wasn't just kind of a false breakout, or this negates this double bottom. Normally, when you make a double bottom and you break the high or the low in the middle, you go twice that distance. And so a shallow pullback here, maybe filling the gap that we made at the start of the week on Monday, I would expect to find support and continue higher for one more swing, and only back above that level. I think it was 305. I'm going to put in the fib level from this high to low. There it is, 305. I would be bearish Microstrategy underneath 305, but I would not be surprised at all if we found some support there for one more push higher in Microstrategy, and that keeps me a little bit more hopeful that Bitcoin has one more swing higher from here, and needs to, if we're going to bottom, we really need to start accelerating soon and not keep getting dragged down by what's going on in the Nasdaq and the broader market at the moment. I'm hoping it was just options expiration and this 85,000 pain level. If I take all this off, let's tidy up here. There's quite a lot of support and resistance here around this 85,000 level from previous moves, and we can see, so I'm not too bearish. So just like Microstrategy and Bitcoin, I'm looking to see if we can find support here for one more push higher, and then we really do need to accelerate. Everything is so uncertain at the moment. You kind of need some good news to be announced, because so much is getting hit by what's coming out of the US government or world events. And so I'm really looking for this to, something unexpected like that could in fact be the catalyst that we see for this to find some support. Otherwise, I'm afraid path of least resistance might be over, and we may be setting up a bigger retest of the lows. There were some quite positive news in the crypto market yesterday. One of them, I think, was to do with what's going on with stablecoins. The US government stablecoin legislation is going to be really positive, I think. If we think back to previous rallies in crypto, we could argue, but I really do think that the start of Tether, which has often been criticized for its lack of transparency, really was the fuel that helped previous rallies in crypto. And then, of course, we got many, many more. We got USDC, which a lot of US-based people preferred because it was more transparent and auditable. And the announcement, that the Trump family are going to have a stable coin with their world financial coin, and JP Morgan, Fidelity are looking at a kind of institutional stable coin. I do think that maybe this might actually be the best use case of crypto and blockchain technology. So let's see where we go from there, because if they do expand, they all provide liquidity for crypto, and liquidity is the fuel that helps crypto higher. So that's what I'm hopeful about going forward and watching this 85,000 level today and those moving averages in MicroStrategy. And as we know, when Bitcoin finds support, then quite often all of the others do too. Let's talk about the really nasty sell-off in some of these other assets. So here we are back retesting the lows potentially in ETH. Now, if we look at ETH, I'm looking at big fib retrace levels in ETH from all-time lows to all-time highs. And these fib levels have worked really well. Sometimes it's, it's a volatile asset, so sometimes we spike underneath them. But we did a big 786 rally. Here we are at this 61.8 level, which has previously been really good support and resistance. We're underneath that round number 2000, but for me the fib level is at 1859. I'd like to see this on a weekly basis, which would mean Sunday, close and hold as support underneath it. And you can see on the daily, this level has really held support on a daily close basis. So here we are back testing it. It's possible that this holds for another go at a swing higher from here. I'm not super bearish, but for me, getting underneath and then finding resistance from this 1859 level would point to more downside today. Again, I think we may need to see month end kind of shake out and next week shake out. But this certainly is the support, a back test of this support, and I would not be surprised to see, an attempt at another swing higher from here if this holds. So in an oversold bounce level. And if ETH can bounce and some of the other assets can bounce, then that's pretty good news for the smaller crypto assets as well. So let's take a look at some of them. So Ripple, which has been bounced around really. One of the reasons I said I wasn't too keen on longs in Ripple in this bounce was this sideways consolidation. I have a feeling, that we've lost this low in the middle here. I wouldn't be surprised, when you're in the middle of a wedge at the moment, and this is a wedge, we've got 2-3 touches on the top side and we've got 2 touches on the bottom side. When you do this, or when you draw it as a bullish pennant, quite often it can turn into, a bullish pennant can turn into a flag. So it could be that we see another swing lower from here and potentially new lows, and it would still be a bullish flag pattern. Because this is a big 50% level, we know holding it and retesting it and this daily 200 moving average, we might not even do that. We may just come down here, retest the lows with a third touch, false breakdown of this trend line. That would be very bullish for Ripple, and then I would expect it to bounce from here. Again, I think we're in a big wave 4, and this kind of triangle or wedge pattern is very common in a wave 4. So path of least resistance, unfortunately, weighed down by everything, and the moving averages, particularly on the daily here in Ripple, is unfortunately lower for now, and I prefer this selling short-term bounces for lower and a retest of this trend line first, which potentially puts us down around 1.93. But just bear in mind that if this breaks, that we are more likely to be looking for one of those measured moves and messier correction here. There are people who are talking about this as a head and shoulders pattern. The important thing to remember at head and shoulders patterns is when they fail, it's usually because they are a measured move. So this is the first swing, here's our 3-wave bounce, and this would be a measured move relationship. So if we measure from this high to this low, project it from here, our first target then would be 2, and if this breaks, our measured move target is 1.39. That would be where I would be looking this to bottom out, and then we can see if we bounce from here and we recover this daily 200 moving average and we recover this important support zone, that would then also be a pretty good kind of bullish confirmation that we bottomed and are on our way higher again if we break down. So that's how I'm seeing Ripple, still in this sideways zone, but pretty much being weighed down by everything else. Don't be surprised if we get another of those eclipse shakeouts and this level holds the support and we stay within the triangle. This is going to be really around here between 2.0 and kind of 1.9 is going to be the key decision level. And if you're shorting this should be your first target level, and see what happens there in Ripple. Quite a lot of other, let's talk about some of them which are looking pretty interesting. So this is ADA. Now in ADA, we could argue we got rejected at resistance. We didn't break the target, so we'll take that off for now. And here we are sideways at this daily 200 moving average, and we've really been sideways at this 200 moving average the whole month of March. We dropped into it and we have been sideways at it. I know we're underneath it at the moment, and a lot of people will be screaming and thinking this is it, we're going down. We've closed underneath this 200 moving average a couple of times and getting back above it. Again, you know, when you're in a flat sideways range like this, all of your moving averages are bunched up. You really haven't got a trend until you break out of it. And when you do, and you get really bunched up like this, because let's face it, the whole month has been pretty tough, you usually get an explosive move. I don't know which way it's going to be, but we can see from previously, you know, this 200 moving average, when we get above it, it can be support. Underneath it can be resistance. If we cannot recover this 200-day moving average at 0.72, this one is still headed lower. And yeah, we could see a pretty nasty eclipse shakeout in this one, but because these highs held as resistance and it was it's a proper sideways range, I would not be really bearish this one, unfortunately, unless we break these lows. And I would say if you're shorting this, a retest of these lows really should be kind of your first target zone. You know, we're not going down unless it breaks, unfortunately. And we could argue, you know, bigger trend line resistance comes in here. So we could very easily, if we go from the lows at the beginning of February, we could argue very easily that we get a third touch of this trend line and we retest these lows. And so if you're looking for where my ADA finds support, that would be a very kind of logical place for it to happen, which means we have further to fall, and we're looking kind of more likely around the kind of 0.6, 0.65 area on a shakeout. And then underneath there, I would say that's when I would be, that's for me would be much more bearish. So if we got underneath that 0.65 level and it then became resistance, I would say watch out. Then, because then we've got this much bigger pattern in play here on the daily at ADA. So this would be 1, 2, 3 down, 1, 2, 3 up, and here's our next swing, big swing lower, which would have a relationship to this first one. So if we measure from this high to this low, project it from here, you can see this is our 61.8 level at 0.68, closing and holding underneath 0.68 gives us a target down here at 0.37. So if you're looking for shorts in ADA, that's kind of the setup. You need to be underneath 0.68 and 0.682, and then that's your target, like that. So for now, this is serious, important resistance, and not a short for me unless we break underneath here and hold underneath 0.68. Okay, let's look at some more charts of interest today. One of them, he's always in the news, of course, Jason, Tron. And when I look at this chart on the weekly, you know, this is kind of one of those levels where you can see every time we pull back to this weekly 20 moving average and we're trending, we find support and keep going higher, and it works really well. And here we can see this week we retested this 20 moving average again and have not broken out of this sideways range. This is a weekly chart. We've really been in this sideways range since the beginning of February, and here is our sideways range. If we were to break higher here, a break above these daily moving averages, it's looking pretty strong. Let's get them back on. I haven't got them on. Here we are. We're underneath them at the moment, but if we were to break just a little bit higher above this daily 50, our first target would be a retest of these highs, and then we see if we see another bigger leg higher. But again, potentially this correction is over here and we are headed low. neutral, but neutral sideways in a really strong uptrend and sideways on potential support as well. And it could be, we have done, if we go to the daily here, we've done our correction, we've done our bounce, and we could be setting up another leg higher. For me, this is such important support on the daily and on the weekly. This weekly 200 moving average, only holding underneath that for me would be a breakdown for another leg lower. I much prefer this to find some support, and we see another swing higher here in TRX. I actually think this is one of the more bullish charts and one of the ones that I would prefer to buy a pullback in. Let's take a look at a few more charts of interest that are holding really interesting levels. This is a H bar, and if we look left in H bar and we look back to the high that we made in April 2024, a year ago, here we are sideways above this level, big 61.8 fib retrace from the low that we made in November 2024. Just one of those levels. The problem is that we've already done one swing. You know, when you bounce from a 61.8, your target is the 38.2. We did it once here, pull back, done it again. And so I feel like perhaps, unfortunately, this one is headed lower, because here's our first swing lower, here's our 1, 2, 3 correction, and here's the first swing. And so this one for me is an interesting short if we break and hold underneath this important level, 0.179. Underneath 0.179, our target is 0.118 on the short side. But at the moment, this is just sideways at support, and quite honestly, could just as easily rally from here. You know, when you go sideways in a 61.8, 38.2, sometimes, and we can see it on lower time frames, this 50% level in the middle becomes support and resistance. It was support, resistance here, resistance here. So if you're looking for a better place to, if we bounce, where could we sell this from? I would say this 0.22 level here and this 50% level in the middle would be a good place, and I'm looking to see if this holds to get up there. But if we break down again, this on the short side for H bar, 0.11, that means if you've been tentatively buying it against this support level at 0.18, that would be your signal that this is wrong and not working, and we will see more downside. And here's your target in H bar. And to be honest, we could go either way. You know, these are big levels, and I'm not sure which way we go from here. A lot of support here. It's very hard to short it into such important support. Let's see if it holds. So some of the ones that I've been looking at, as you know, let's take a look at Bittensor, Tau. If we look at this on the daily, this is one of the ones that I've been trying to buy, but this now has set up as a textbook ABC correction. Here's our first swing, here's our 3-wave pullback, here's our 3-wave C-leg. This C-leg was 61.8 of the first swing. That means the correction really is complete. We haven't been able, if we look at this on the weekly, we haven't been able to get more than halfway back of this candle. It really is starting to look a little bit like a bear flag at the moment. So I've given up on my longs with this rejection here, and I'm waiting to see where we go. We could just continue lower, and then we are looking for the bigger measured move in Bittensor as well. So if we continue lower, where are we going to buy this one? Well, if I measure from the high to the low, project it from here, 124 I think is where we end up. And if we see if that lines up with kind of some decent fib retrace levels, that's what I would like it to be. I think it's going to be one of those typical crypto 886 fib retrace levels all the way down here. Yes, it is between 117 and 124, unfortunately, for Bittensor. Not the bullish reversal that I was looking for. There is a pretty interesting support level in between there at 192.3. That definitely would be a short-term target bounce level, but for me, the bigger buy and hold for the bigger swing, unfortunately, could be lower in Bittensor. So CRV curve was another one that we've been following because it had such a decent rally, you know, from the beginning of this month. You know, we've looked at so many charts where everything's just gone sideways for the month. Curve has had a really decent rally from the 10th of March. So if I put my fib retrace levels on from this high to low, we got above the daily 200 moving average, and unfortunately it was short-lived. Today we are back underneath it and we got rejected at this 236 fib level. So what does this mean for curve? I think the bigger bottoming pattern here, or the best look for a bottoming pattern here, would be an inverted head and shoulders. I pull back into these daily moving averages, the 20 and 50 here. We need to see a higher low and another attempt at this 236 fib, and then above it we can talk about this being that bigger bottoming pattern. At the moment, in fact, that's narrower than that, isn't it? So the good news here is this is pretty narrow left shoulder. So if we were to make a pretty good inverted head and shoulders pattern, it will be a short dip and then a reversal higher. So we're going to keep that as our resistance. We're going to keep looking for that level, and rather than, we're going to look now for where our pullback, ideally 50 or 61.8, and back into these moving averages would be where I'd be looking, and that's exactly where these daily moving averages are. So around 0.478, I think, in CRV is where I would like to see this find support on a shakeout. It could go deeper and it would still be a balanced inverted head and shoulders pattern, but for now, this back underneath this 200-day moving average, which is at 0.54. I'm wrong if we get back above 0.54. Otherwise, I'm looking for a pullback into these moving averages and a higher low in CRV before we begin the next swing higher. And I would say that this first swing is unfortunately over with this really reversal today. So yeah, nasty shakeout and a lot of de-risking, I think, happening ahead of next week. So watch your profits. Honestly, you don't have to ride these all the way down again. You can buy them back lower. Good luck.